Hello, everyone. Welcome to today's session. Let's go ahead and get underway here. Let me just get my, it is open there, drawing tool. Market conditions, bullish in a bull market, extended towards that overall upside here. And let's take a look at current momentum, which has moved from this extreme back into this bullish trending zone. Breadth indicator is now in this trending mode. It's gone from extreme back into that trending mode, and that's one of the concerning things of this overall rally right now is we're just not getting broad-based participation, and we're also getting buy-sell ratio, which is continuing to extend to the upside. We've got 0.4 now, and ideally we want to be above 0.1 to be able to, or excuse me, 1.0, a buy-sell ratio of 1 or higher to be able to have the bulk of the momentum moving to the upside. We're not getting that right now. We're getting the bulk moving to the downside, but we are getting indices that are still moving to the upside. So we're getting some odd divergence happening here in the markets, at least with S&P 500. And let me get back to here. I wanted to go to this one. And this overall uptrend, S&P is really holding up, NASDAQ's holding up, Dow's holding up, but the underlying, it's just a really narrowly based rally currently. That can still continue to move to the upside as maybe some of these additional stocks that are in downtrends do stabilize and then ultimately move back up, or the strength and the stocks that are strong start to break down and start to weaken. So we haven't seen it yet in the major markets as a whole, but we are seeing that in the breadth primarily. So we're seeing it in the breadth indicator, and we're also seeing it in the buy-sell ratio. So that's really as far as the strength of this overall uptrend, the level that we're making new highs. That definitely is not a reason to aggressively sell, but it is a reason to be aware that we could be due for a retracement. And what that means is essentially how are we allocating and adjusting for our in our overall portfolios. We've seen commodities really all selling off. We've seen sector ETFs, which are relatively strong right here in this buy and hold range, with a handful of these stocks still in downtrends. And those are basic materials, real estate, utilities. We're seeing some weakness here in these hold signal stocks here, where we go from this uptrend to downtrend. And so we're seeing some weakness towards the top right here, or at least some of the parts of the market are starting to retrace and start to move lower. We've also seen an interesting thing in bonds here, where we had this really sharp uptrend and then a retracement moving back down again. And so some volatility happening here in bonds, which is not surprising with the way the Fed has been starting and stopping different policies and the way that they want to approach the interest rates. And they're just still dealing with inflationary numbers. So they get a good employment number, they're not going to lower rates. They get a good CPI, the price index moves higher, they're probably not going to lower rates. So they're starting to waffle a little bit now on their idea of moving interest rates 3 times this year, at least they said in March. So we'll see what that looks like moving forward, and if the markets ultimately are going to be okay with that or start to get a little bit spooked by that. If we take a look at the markets, the indices as a whole, if we go to, actually let's go here and index scans. We're seeing the Dow, buy-sell ratio on Dow is at 1.4. We've got 14 stocks in uptrends, 10 in downtrends. NASDAQ 100, 29 and 24. And NASDAQ, S&P 500, 41 and 38. So we're seeing these major market averages holding that buy-sell ratio, but then we look at some of these small and mid-cap indices, 0.45, 0.41, 0.43, they're just starting to weaken. So the risk, typically these are referred to as risk on type of stocks. They're smaller cap, they're mid cap, they're a little bit more uncertain, they're a little bit more volatile. Maybe the underlying companies are a little bit more uncertain as well. And that is essentially what market conditions are looking like right now. So more than likely going to maintain a little bit of a muted strength to the upside, unless we really see those mega cap tech stocks continue to move to the upside, which is a possibility. But we are starting to see those break down as well. If we look at the Magnificent Seven, We've got Google, which had a pretty big sell-off here in the last few days. We've also seen Tesla, which is in a pretty nasty downtrend and continuing the 1-year time frame, really retraced almost that entire move from that last summer, May to July, and then corrected everything here. And even on the longer time frame, potentially getting to a point where it could see some retracement, a bounce of this overall uptrend, but as of right now, just really no indication of any support yet. But it's extended to the downside as well. That I don't know that I'd be super interested in Tesla anytime soon. On the flip side, though, Amazon has continued to make new highs, gapped higher the other day, and is in that overall uptrend. That's a pretty nice gap, could just be retracing. Once we get to these extreme levels, we certainly want to allow for that to pull back, and that's typically the case. You get a big move higher, it pushes momentum all the way up to this extreme range, and then we start to get some just some pause, potentially even retracement back down or just sideways activity, but interesting move here on Amazon. The rest of them, we've seen Meta had another huge move as well. Apple and Meta both participating nicely in this uptrend. Microsoft has been as well. So kind of mixed from that group. NVIDIA also having a bit, continuing that overall move since that breakout point at about 500 on NVIDIA. The overall leading sectors, if we look at current leading sectors, construction is still in the case. I mentioned this in this morning's update, and that is buy-sell ratios across the board on sectors are also relatively weak right here. So we're seeing just some overall weakness in the market as a whole, and being able to get a reversal out of this or some kind of a counter trend. It'll be interesting how that unfolds, because we are seeing we're just seeing a lot of volatility right here in on the internals, on the breadth indicator. A lot of stocks that are in downtrends, and are the stronger stocks going to hold up enough to pull these higher? We're getting to an unsustainable location in trend where we just don't see markets as a whole. Let me find where I'm trying to get to here. Here we go. Yeah, S&P 500 is what I wanted to look at in this overall uptrend. So even with S&P as a whole, we could see a retracement now back to 382. We could see one back to 476. Now, in terms of beginning the process of allocation or portfolio adjustment, when market conditions are moving higher, there's several ways to approach it. Number one is just to continue to follow a methodology as you're adding into your scan, your screen, your criteria to be able to look for maybe the new buy daily strategy, or if you're doing it weekly, to be able to continue to add into that. Because as markets are still not dealing, the breadth as a whole, we can still be stock pickers and still have some opportunities in this overall uptrend. That being said, though, we have to be cautious. For example, SYN, it had a new uptrend here. It had an earnings, I believe, and then immediately gapped lower. So in this case, an overnight gap wouldn't have affected a new trade, because we typically are trading in the morning, so we would have seen that gap. But we're starting to see some potential breakdowns in leading stocks that are either getting some kind of a news item or other negative news. That being said, there are still other stocks that are doing well, and those are going to continue to show up in that new buy list. And what that can mean in terms of allocation is simply taking your portfolio. Let's say that I'm using the new buy strategy, and right now it's got about 48,000 in cash. It's a little bit more than 50% invested, with some in cash. With the market conditions the way they are, these are going to be times to start to look for what's happening to new additions that we're adding into. Are we getting any confirmation, any follow through, or are they starting to show weakness? There's been a handful here that we've added into that have had a little bit of weakness. HMY, gold stock, that still could hold up if gold starts to show some support and move higher. But I'm just going to go through this list, and we can take a quick look at some of the holdings. And ANF has been a holding for quite some time. It's just been a really smooth overall uptrend. You can see just how smooth that pattern has been. Very, very little volatility. It's also, again, it's had a really nice sustainable trend. I like these stocks when they have this, this 45-degree angle versus one that goes straight up. Those are still, those are still certainly tradable, but these are a little bit more consistent over time. And this one has been a nice performer. ARDX, also medical drug, had some really nice moves in medical drugs. The month before, we had some nice moves in some of the blockchain crypto miners. We're seeing medical drugs can continue to work. These can collapse in a hurry. These are certainly stocks as where the market is right now to be watching for some action like this, to where they start to go straight up. And essentially when we're connecting to a new high and we're a long ways away from that momentum zone, that can be a range of volatility. So as we're continuing to work with stocks that are working and moving higher, we want to maintain a trailing stop or an adjusted stop loss on those so that we are protecting against some kind of a move lower. I've seen it even in some of these stocks where once that selling begins, they are volatile enough that they can really collapse. So if you have any of these that are continuing to work and do well, just make sure you're managing that stop and starting even to scale out of some of those, or at least reducing some of the positions. I wouldn't exit entirely because of potential like this. IMNM, medical biotech, had a bounce right off the 618. I'm not sure what that news item was, but here's an example of that, or I said 618, I meant 236. This support area here, this swing high and swing low, solid uptrend, retracement, some support, and these are the kind of stocks that you just never quite know what it's going to give you. Never quite know if it's going to, you get that real strong momentum to the upside like we're seeing today, or if you get a collapse to the downside, the other direction. Those are, that is part of the reason why we don't necessarily want to set real hard targets in terms of exiting the entire position at once, unless we're using a stop loss early on where we're protecting our capital amount. In that case, we do want to have a hard stop loss, meaning the entire share amount. It doesn't necessarily mean that you have to watch it and then go in and sell it. You can set up a stop loss in your brokerage account to be able to monitor, to adjust that each day, so that if there is a reversal, your brokerage account is automatically going to exit you out of that position. And that takes 10 or 15 minutes every morning to be able to just manage, just to look, see where the positions are, where you may need to start to unwind some of the position or adjust stop losses as well. Here's an example of just some continuation, starting to get back into that upper range. I've already trimmed it a little bit already, and so the number of shares are getting less and less. I'm probably going to start to trim that one again, just because market conditions are also looking like they could be a little bit toppy right here. Now, that's not a systematic term, toppy, but when these stocks do reverse and the market as a whole starts to downtrend and you do get broad-based selling, then it's everything. It'll be almost every sector in stock. It doesn't matter what becomes hot at the moment. When the market starts to turn and shift and you do get broad-based selling, a lot of these can also collapse. So we want to trade them and be with them as long as we possibly can, but we want to make sure that we're smart on stop losses, making sure that we've got an adjustment that we can protect those gains that we've got. Okay. That could mean, depending on your risk tolerance, depending on your need for the cash, depending on lots of different scenarios, you may have a situation where you're like, okay, I need to start unraveling a little bit of this risk by making some of these positions slightly smaller. Doesn't mean selling the entire position, but it does mean making these positions smaller and tightening the stop losses on those, and then watching your losers as well. If you've got a handful that are either losers or hitting stop losses, and those can be areas that can be like, okay, I've had this for a length of time, it's not performing. ARCH as an example, I've still got the stop loss on this down here at 163, and you can see once it starts to break through that 236 and that next stop becomes a 382, oftentimes I'll set that stop either here or just slightly below that, or watch to see which one hits first. If you get a sell signal and or a stop, now everything right here is kind of saying it may be time to go ahead and just exit out of this one. It didn't quite get that stop loss, but now we've got a downtrend and you've broken through this 236. So now we've got some resistance. That could be, if I'm looking to reduce the overall position or the overall portfolio exposure, these are also places that I want to start. I want to start on some of the stocks that are not working, meaning they've initially got a new entry and they just haven't moved yet. Unless it's something that's we've been in relatively quickly. SPNT is another example. It's just we had this big uptrend right here. Here's our bar. This is our entry. So we're actually, our entry is right here. We've now broken through the 236 and potentially moving back down to some of these low points where we could get a stop out on some of those. So as I'm going through and saying, all right, which ones do I want to start to reduce? I could do it with mass exposure as well, meaning I could take everything and start to sell half the position on each, locking in some of those gains, raising the cash level, maybe taking that cash level from where it is now back up to 50% or maybe even a little bit more. So we've got just a little bit larger holding in cash is what I'm considering over the next few days, probably as we look for the remainder of this week. One other strategy to be able to utilize is, in addition to adjusting risk inside of a portfolio, is to create a hedge inside the portfolio as well. One of the ways to do that, and I've mentioned this before to this group, is to be able to have a inverse ETF. So an inverse ETF like SQs. Okay, SQs is an inverse and leveraged ETF. If the NASDAQ 100 or the triple Qs drops in value, this is going to go up in value by 3 times that. So if the NASDAQ drops by 1%, this is going to increase by 3%. So it's a way to be able to hedge right here. You can see that, this is, if you flip this upside down, this is what the triple Qs looks like, but up here to the upside. So if it's topping out and reverses, this is going to be bottoming out and rally. Okay, so in terms of hedging, if you're like I think the markets are due for a pullback. They certainly look like they are. Breadth is declining. Buy-sell ratio is less than 1. Some major sectors we've got the bulk of the sectors which are also in downtrends, and we're at all-time market highs, and the Fed is not lowering rates, and now earnings is going to start to be another big factor. We're going to see earnings starting to pull in here with some of these stocks. And if we see some earnings that are decreasing and companies that are tightening up and laying off employees, those are all reasons to start to be a little bit suspicious of continued upside to this rally. Okay, it's at an unsustainable area already, but it can certainly go higher. If we go out here and look at 2 weeks, it's within a reasonable, we're not extreme anymore because we keep getting these little pullbacks, and that's a good thing. I like these day or 2 or 3 pullbacks, but we've had, a really good solid uptrend, kind of comparable actually to the length of time that we had in this uptrend earlier in the last year. Okay, so we'll watch to see if we see, day or 2, a couple big days down, but now is the time to start to make those adjustments if you're wanting to. Don't expect straight up from here. Okay, we're going to get some volatility, and now's the time to be able to start to hedge for that by reducing exposure and or setting up additional hedges against any possible downturn. Okay, so one of the ways to set up that hedge is take some of this cash, let's say, I don't know, 5 or 10%, and going into one of those hedged ETFs. If we do get a big rally, the issue is being able to have some potential losses on this as markets maybe continue to move higher. So I want to watch to see the next couple of days and see if we do get another push or 2 higher. But in the meantime, starting to whittle back on some of these overall, some of the gains on some of these trades and getting rid of some of the losers. Okay, let's take a look here also at just a couple of stock ideas in the muscle stock group as well as new buys to see, as I've mentioned, one of the times that when we see stocks that have these really sharp rallies and they've got a high rank of 90 or higher, and you go through and you're looking at some of those stocks, we can start to watch for some of these stocks that are in that buy zone. Maybe they haven't gone from hold to a buy, but they are still in that overall buy zone. And that's not a good example. This one kind of is. It's starting to get some retracement here as well. Still, let's see if we can find an example of this. These are all moving pretty decent. NVIDIA, there's our trade there. And a little more like this. It's got an uptrend here, still in the green, but now back in this buy zone and having a little bit of a pullback. So this not a perfect example. We'll find some more here, but once it's had a big uptrend and then it's retracing, but it's still inside of this buy zone in an overall uptrend. Those can also be stocks to look for, add to a watch list for consideration to adding into a portfolio as well. And NGL, we actually do own this in the portfolio also. Here's an example of it rallies, it retraces, it's still in that upper momentum zone, but now it's in that buy zone. But if you were to do a scan for it from a hold to a buy, it's not going to show up. So you may have find some additional opportunities on this group of stocks that can continue that overall uptrend. Even though it hasn't gone from a hold to a buy. So spend some time on these in the morning if you don't, scanning through that list and seeing if there's anything in that new buy list to be able to participate in. Let's see if I've got anything else to be able to go over. That's really the core of what I wanted to focus on, or just the breadth is an issue right here, and certainly one to be aware of. How to manage that is at the portfolio level, to be able to change the amount of risk that you're dealing with that is exposed to equities. So, and the way to be able to start to adjust that is start to harvest some of the gains you've got on these winners. You could potentially sell half of the position on really any of these larger gains, start to whittle those down, tighten up the stop loss. And then also if you really need to raise additional cash, go back to some of these stocks that maybe we've had in the portfolio, or you've bought and you've owned it for 2 or 3 weeks and it hasn't made a move yet and it's retracing and it's just kind of floundering. Those are areas also to be able to start to prune those out of your portfolio. On Thursday, I'm not going to be around. I've got a medical procedure that I've got to get done. But I am going to do a recording on that day, more than likely in the afternoon. So there won't be a class, but I will do another recording just like this and post that to the Learning Center and post that out to YouTube as well. So everyone have a fantastic day today, and we'll see you next time. Thanks a lot. Bye now.